It is May 2022 and the real estate market is changing. Interest rates are up. What are going on with prices? Buyers, what are you thinking? Let's talk about it. Hi, I'm Theresa Wellman with HomeownerExperience.com. We're digging into the actual real estate data for sales closed in April, which means they went into contract in March. But we're going to talk a little bit about some of the leading indicators and what I'm seeing in the market and which direction I think the market is going. So you want to stick around for this video because we've got a lot of real good data to understand and look at to compare to recent history. So let's jump into the computer. Here I've got the view of Santa Clara County, and the prices are doing something interesting. Do you see a tiny dip? The median price has leveled, the average a tiny dip. And this is again a 22-year history, so it looks kind of small here. But what I can tell you based on other factors is I think we might have had our price peak in March, which is kind of early, but we're gonna get into some of the historical information. So let's look at San Jose specifically. So in the field, I've noticed that the supply is up quite a bit. Many areas, Blossom Valley, Almaden Valley, Cambrian, are seeing much higher supplies than we've seen in a while. And if you look, we're definitely hitting those peak numbers of the last couple years of the pandemic. But looking back historically, we're still at relatively low numbers, but we're feeling that slowdown. So I think this year we're going to return to a pre-pandemic typical cycle. So we are not at the inventory peak. Even though we're at the peak of what we saw the last couple of years, I think that inventory is going to continue to go up. Demand is slowing because of those interest rates. And if you look at the pending numbers, they have actually leveled off as well. And the sales numbers are pretty good. But again, remember, we've got to subtract. Those are sales closed in April, which means they went into contract in March, which March market was different interest rates than today's market in early May, for sure. So buyers, I think there's an opportunity. You might want to jump into the market because things are settling and some sellers are getting nervous. And you don't want to wait, buyers, because if you wait, interest rates are going to go up even more. So affordability is not going to change, or it's only going to get worse. So better to come in and negotiate and get a deal if you can right now. So let's look at the actual numbers for the San Jose market. The average price is up to 1.9 million. What? That's crazy. That's up from the previous month of March. But again, remember, these went pending in March, closed in April. It's up from last year, 25%, really significant. And we are seeing less homes in contract. We're at 65% of homes in contract, where last month it was 71%. The sales price to list price ratio shrinking down a little bit, another indicator. So it's at 16.6% on average over asking. Days of inventory increasing a little bit. Now, the number of closed sales is up from last month, which is typical for the seasonal time frame. In spring, sales go up. But we're down 21% from last year at the same month. So again, sales are softening a little bit. The number of pendings also down from the previous month. So has buyer interest waned, or is it those interest rates that just are pricing people out of San Jose? We're still up 14% from the pending sales last year though, so still strong numbers in that department. So I am seeing a lot of activity from buyers, but buyers just not as motivated to move as fast, and less offers being written on properties. In some cases, overbidding is really shrinking. Sellers are getting closer to list price. Maybe only one or two offers. Some cases are sitting longer than a week. So these are all signs that the market is leveling off. I want you to stay tuned to the end of this video though, because I'm going to talk a little bit about some historical information and how I think 2020 looks like a previous year. You're going to want to know that. And also we're going to get into the condo data, which is different. So let's look again here at this chart in San Jose. So I talk about prices leveling. I've mentioned that a couple times. And the traditional market peak in prices is usually May through July, meaning pendings in April, closing in May, right? Remember the month before. So I think we're hit that peak already, or very close to it. We've already seen huge gains in 2022. Look at this slope right here. Such a big gain from January, but if you go back to September, which was the low market, monster gains in that time frame. So the forecasts have always been for 2022 to be a little bit closer to 10%, not as crazy as we saw in the pandemic, which was like 20 to 25% every year. So they expected prices to soften a little this year because of interest rates, just because of prices, many other factors, right? But we've already seen a 16% gain from January to April. And if we look at that September gain that I point out here to April, we've actually seen a 28% gain. Wow. So that is huge. And if we look at the forecasters, I do think that prices are going to settle out a little bit and get closer to that 10% appreciation for the year. So as I promised, I wanted you to stay tuned. Here is what I'm talking about as far as 2022, I think looks a lot like 2018. I've been saying this for a while, but there's many reasons. First off, there were huge gains in the first quarter of the year. Same thing in 2018, but obviously relative, not as much as we saw in 2022, but 2018, big gains, right? Then there was also a huge increase in interest rates in the latter part of 2018. We went from 4.25% up to 5%. So a 3/4 point increase in interest rates. If you look at what's happened here in 2022, since March 1 to today, we've seen a 1.5% increase. So huge impact from interest rates to affordability. So I think prices are going to level out for a month or so and then follow a more traditional seasonal flow and maybe even dip a little bit like they did in 2018. So it definitely feels to me like a market of 2018 with the interest rates, the inventory, the factors leading up to that year. So let's look at those interest rates. Here is that huge gains that I talked about. If you look at March 1 all the way up to today, about a 1.5% increase. And yet we're still below historical averages, 2008, 6%, 2001, 6.5%. Probably going to be close to 6% by the end of this year. So, being at 5% or upper 4s, depending on your credit and your loan size, is definitely not a bad thing. But yes, it does feel drastically different than it did just earlier this year. Now, the stock market's been bouncing around. The stock market is down, which usually means Santa Clara County prices also go down, which we're starting to see. So all these factors leading to that, we are at likely the market peak in prices for a little bit. But again, affordability is a factor, and affordability is not going to get better when prices go down because interest rates are expected to continue to rise. Unemployment really low, 2.5%. So the Silicon Valley market is really strong. Now let's jump right into that condo market because that's really important. It's a different type of market, different price point, of course. And if you look at the peak of 2018 here to where we were earlier this year, there were no gains in condos and townhomes. We're starting to see those gains show up. We're starting to see finally an increase in inventory though. So I don't think the gains are going to continue to shoot up at the same rate as they've done the last couple months. They will level at some point, but I think I don't think we're at the peak for condos and townhomes quite yet, just because the supply and demand factors are a little bit different. So next, I want you to really watch those videos if you haven't yet about interest rates. I go into comparing 2015 through 2022 rates and understanding affordability and historical factors with a mortgage expert I work with. I also talk about running the numbers today. Should you buy now or should you wait? Again, interest rates are likely to go up more, so probably doesn't make sense to wait, but you want to watch that video to get actual numbers. Thanks for watching.